And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my friends and futures traders family. It is time for the market prep. Wednesday, January the 4th. My name is John Hoagland. As always, thanks for trusting me with your time. Our focus, context, risk management, and patience in our trading. This morning, economic numbers due out. We still have the ISM Manufacturing Index and the Job Opens Labor Turnover Survey due out at 9 a.m. Central. Mortgage rates higher this morning, 6.58% on average, up from 6.34% average last week. 1 p.m. Central, the big one that everybody is waiting for today, the FOMC minutes, where we get a look at what was discussed and maybe a hint on what the plans are for the future. As far as news this morning, we've got U.S. stocks following European and Asian stocks to the upside, ready to open cautiously higher, awaiting today's inflation-related manufacturing index and FOMC minutes as investors will focus on clues to the Fed's future expectations. Crude prices have continued lower this morning, down approximately 2.4% right now, adding to the 4% drop yesterday. Gold and the euro push higher as the U.S. dollar gives back most of its gains from yesterday. VIX is a little bit lower this morning at 22.75. The dollar index down slightly, 104.05. And the 10-year yield, exactly where it was, if I remember right, at this time of the day yesterday, 3.77%. As always, if you like what you see, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome. Make sure you subscribe to our YouTube channel so you can get notified when we do go live. Good morning, everyone. If you're already in the markets, hopefully you've got things going your way. I'm going to take a look at these charts shortly. I do want to let you know that we do have group coaching is resuming at its usual time today at 12:30. There is the link to register. That is the link for the rest of the year, at least until December of 2023. I've got the link for Make Hoag Money today, the afternoon version at 2 o'clock Central. There it is. And speaking of VIX, I saw an interesting article today on the VIX, and I'm just going to put the link in so you can read this at your leisure. Thought it was an interesting one. I thought I'd send it out there. Hopefully it's going to work for you. And so the first link, again, group coaching, 12:30 Central today. The second link, Make Hoag Money at 2 o'clock Central today. And then that link at the end there is an interesting article from Market Watch on the VIX. And what else did I have to tell you? I guess that's it. We're going to get into this. Joel MB is the first one in the room. You win the prize. Caprice, Spencer, good morning. Bear goes long. Let's have a great second trading day of the year. Couldn't agree more with you. Bear goes long. How are things up there in Montana? Dimitar, Brody, Hegel Matters. The Randolph to my Mortimer. The Winthorpe to my Valentine. My brother Rick is here. Love you, buddy. Scott saw and he conquered. Shadow of Crimson. Good morning. I don't know that I've seen that chat name in here before. Thanks for chiming in and saying good morning. Welcome. We got Vince Capri and Al Santoro, the Sicilian faction, this morning. Vince caught a nice fish in gold this morning. I think I was fishing in kind of that same area of the lake. Nice job this morning was going to point that out. The opening range, the low of the session so far in gold this morning, offering a really nice opportunity. Taurus Trader, good morning, Bill Phillips Caesar. JD, good to see you this morning. Sarah Hall, prayers and love as always to you as well. Eric Hill, Laura McLaren, good morning. Anissa, Serenity Trader, Ola, Backer Sultan, Dark Heaven, Swapnel, good morning to you. George, good morning. And Lacey says good morning to everybody as well. Rusty Golfer, Snowflake, Spencer. Good. I'm glad you're going to take a look at that whenever you get the chance. I just thought it was an interesting article I thought I'd put out there. Charles March, White House Cap, morning from Chicago. Fred Decker's with us this morning. Manuel Caesar and Shaw Cunningham, happy Wednesday to everybody. So we're going to take a look at these markets here shortly. Jan R., Stephen, Dowitzer, good morning, everyone. So we're hoping that you had a good trading day to start the year yesterday, but today is a new trading day every day. I try and start from zero. If I had a really good trading day yesterday, I know that puts me at a little bit of risk of taking some bigger chances today. I got to remember that money I made yesterday is mine to protect. I'm going to start my day from zero today, the way I started the day yesterday. Oh, we've got a quote here for the quote of the day. Alejandro, I love these. My contribution to the quote of the day: develop success from failures. Discouragement and failure are two of the surest stepping stones to success. Dale Carnegie, the author of How to Win Friends and Influence People, if I'm not incorrect. I read that book a long time ago. And a great book and a great quote from Alejandro. Thank you very much for that. I got a recommendation for a book. Dr. Andrew Menaker, a friend of ours here at Top Step, recommended a book called The Biggest Loser Wins. And I'm doing it now on an audio book. Fascinating book, just really getting into it. I highly suggest it from what I've heard or read so far. It's really about, can you withstand the difficulties to find the success you're looking for in futures trading? And really a good book so far. I'll let you know as I get deeper through it how it goes for me. And so far I can highly suggest it, because if you can't take a punch, you shouldn't get in the ring. Mike Tyson says everybody's got a plan till they get punched in the nose. And, you're going to have losses in futures trading. It's just a fact. It's a very difficult thing to do, to wrap your head around, to accept, and to move on from. So Best Loser Wins is a fantastic book. Bear Goes Long is agreeing with that. Fred, good to see you. Waking up from anesthesia yesterday. Groggy, but still hilarious and charming. Hey, did you ever notice many of the nurses in the hospital are really hot? Fred, that's what you've got to look out for when you're coming out from anesthesia. As possible harassment suit. Well, they all know, all of those people that are recovery nurses, recovery doctors, they're all well aware of the things that come out of people's mouths as they're coming out of anesthesia. So don't worry about it, Fred. I think you're going to be okay. You're not really in your right mind when you're coming out of that. And thank goodness that the procedure went well. All right. So speaking of procedures, we're going to get into the prep for today's trading. You may have noticed that we're not calling it the forecast, because we're really not trying to forecast anything. We're trying to take a look at the market in context, be prepared for whatever can happen yesterday morning, whatever can happen. I'm going to say yesterday morning we had a couple of late spikes. Well, the late spike in crude oil was rejected right away. But the late spike in the S&Ps, when we opened above that, I'm thinking, all right, most of the time, or at least with a high probability, the market is going to find buyers and continue higher. It didn't happen yesterday. We ended up putting up some pretty good excess at the high of the day yesterday. And right now we're pretty centrally located in an area of balance in our equities. Again, we'll take a look at those shortly. But that's part of the deal is, we can try and forecast. I'm really not that good at forecasting, but I am good at preparing for, just about anything that can happen. If your hypothesis number one doesn't work, you don't want to trade it. If the hypothesis two becomes true, that's the one you want to trade. That's the strategy you want to trade. And as always, we say here on the forecast all the time, anything can happen. ACH. I should put another badge up there behind me that says ACH because no, the same thing never happens exactly the same way twice, and anything is always possible to happen. So the best we could do is prep. That's why we've renamed the forecast the market prep. We've also renamed the market recap to the market reflection. We're going to take a look at what the market did. We're going to reflect on the things that we did, and we are going to be prepared for the following morning. So let's take a look now. We'll start with the E-mini S&Ps. All right. So we had the late spike yesterday. When I look at this, I'm thinking, okay, well, what's the longer time frame structure of this market? We're going to be looking here at the continuation chart. Here's the all-time high. The market in the longest of time frames, or longer time frame, has been pushing lower highs, lower lows. So the market structure in the longer time frame is sellers. It's showing price is continuing to try and push lower. The short time frame balance that we are currently in, I'm kind of looking at these highs and last week's low, weekly kickoff low, as the area of balance that I'm really kind of focusing on. Now, yesterday, we had an opportunity up at 3,900. We were long in the make hog money. We exited the trade there, but we didn't take the short. I was probably looking for a little bit longer, a little bit higher level to take that short, although it was the right thing to do. We had context yesterday with the late spike from Friday that kind of kept me away from shorts initially throughout the day until there was a degree of acceptance back inside the range from Friday. Yesterday, on a down day, we added 11,000 in open interest. There's a little bit of conflicting information because we had a B-shaped profile that would be long liquidation, we would lose open interest. So they think that there is a degree of new selling that came into the marketplace yesterday, looking possibly to adjust inventory or for a continuation move to the downside. One thing is for sure, that move up to 3,900 was a decent opportunity for a short that really, because of context, made it very difficult to take. Well, sometimes the more difficult trades to take tend to be the biggest opportunities. And we had a pretty decent opportunity up there. My brother Rick was the one that said, we should probably get out of this long up here around 3,900. So nice job with that, Randolph. So open interest yesterday indicates new short bets. Now look where we are. Price is relatively centrally located in our short time frame area of balance. We got the FOMC meeting coming out today. We'll take a look at the 30-minute chart. Okay, here's Friday's late spike. Okay, that was rejected. We opened above it. That's usually going to be the highest probability of acceptance of higher price. It was pretty swiftly rejected. 3,900 ended up being our high. It's basically the high from last week. We couldn't take out the overnight high. We left a whole big tail of excess above price here. Now, here's the B shape of the profile. You can see it on the volume profile here. It's a little more stark in the TPO profile. But once the market started to reaccept inside of Friday's range, that had me thinking, okay, we're showing signs of rejection of higher pricing, and had me looking for opportunities for the market to continue the move at least down to the value area low from Friday, which we did achieve. once we got down to that level, I was pretty much done for the day. But what are we looking at this morning? Well, settlement price is 38.46 right here. Put that on your charts if it's not already populated. And we've got some overnight longs in this market. We're above value, but well inside of the range from yesterday and well inside of the range of the past few sessions, maybe even 2 weeks. So the central location here has me thinking I really want to try and remain patient. We do know the 9 o'clock numbers are coming out. We'll be, keeping an eye out for opportunities in and around there. The FOMC meeting at 1 p.m. may be enough to keep the market relatively range bound. So if that's the case, my hypothesis number one might be that if the initial balance establishes itself with a reasonable amount of range, those extremes of that initial balance is likely to where I'll be looking for my opportunities throughout the day. Because again, we are so centrally located in the balance that we've been in for 2 weeks, and even inside really centrally located the range from yesterday. Take a look at this TPO chart. I'm going to go with this is the regular trading hour only chart. So here's the late spike from last Friday. We opened above it. We pushed higher, couldn't take out the overnight high, which we can see here. So here's the late spike from Friday. Here's the overnight, Monday night into Tuesday. We opened, couldn't take out the high, left a whole bunch of excess up here, and we put in a B-shaped profile, which indicates long liquidation, but that would again indicate a loss in open interest where we see a gain in open interest. Now, that's the preliminary number of approximately 11,000 contracts added, so that's new sellers coming in. Look at the overnight, just very kind of range bound inside the range from yesterday, centrally located. Stay patient. That's what this is telling me. Sometimes it's right, sometimes it's wrong. Again, anything can happen, but here we are. The excess high, you're going to see this much better on the regular trading hour session only, is indicating price got too expensive. Buyers wouldn't buy it anymore. Sellers came in and sold this market off, whether they're new sellers or old longs getting out. It didn't matter yesterday. It just we took us back into the range from Friday where we ranged for the rest of the day. So again, try and stay patient. We know our overnight low is 38.39 quarter. Our overnight high is 38.70. These might be interesting levels for an opportunity. Watch the first hour of trade, that initial balance that also can establish some decent range, decent levels for you to take opportunities because, again, it allows you to limit risk. Anytime we're at the extremes, we can limit risk relatively easily. I do want to remember that you're not the only one that's looking at those levels for opportunities. So be smart. Think about where your direct competitors, where the other retail traders are going to be putting their stops. Don't look for those opportunities to put your stops in the same levels. Think about getting in at those levels. Take a look at crude oil. We've just now recently opened. So we're opening below weekly kickoff low. The medium time frame downside structure is intact. By medium time frame, I'm looking just back to here. We've got lower highs. We've put in lower lows. The short time frame upside move is now broken. So we're open and we're in a kind of a downside continuation move, quite possibly. Type of market state. The open interest yesterday, we increased by 20,000 contracts. That's new sellers coming in, ladies and gentlemen. And now that we've broken below the weekly kickoff low, that we're seeing that continuation. So the medium time frame downside structure is intact. The short time frame upside structure is now broken. We had a delta divergence yesterday as well. By the end of the session, we had positive 1,215. Not a big divergence, but a divergence nonetheless. More aggressive traders were buying using market orders in a market that was going lower. And with an increase in open interest, that says we had some medium or longer time frame traders accumulating shorts yesterday. They're going to protect weekly kickoff. Now, that kind of complicates things for us today a little bit because we are already in motion to the downside. We've got overnight inventory that is quite short. We've got the gap rules, of course. If we do get the opportunity up near weekly kickoff high, that gives us an opportunity for an execution because, again, it lowers our risk. Let's see what we did here on the opening range. Here's the opening range. We're still inside the opening range, ladies and gentlemen. We've got a rather large opening range. The high is 75.60 and the low is 74.74. So almost a 40 tick opening range. I'm not going to be playing this. We always have the chance for the short time frame overnight traders who are holding short positions to get nervous, to give us a better trade location for a short upon their reconciliation, if you will, of all of those shorts. So if they start to get nervous, it could give us better trade location for shorts. Here's the profile. Yesterday's profile. Look at that. We had a late spike to the downside. We have opened below the late spike to the downside. This is the highest probability of acceptance of lower pricing. But again, because of the overnight inventory, it doesn't necessarily mean that the longer time frame traders who may need to adjust inventory to the short side or liquidate longs are going to jump in right away. They're thinking the same thing that I might be, that, well, if we got a whole lot of overnight shorts here, if we get an opportunity to up near the gap close, even all the way up to the base of the late spike up here, which is 77.26, that gives us a much better trade location to liquidate longs or to start executing shorts. Watch that opening range. Fred, thank you for answering Shadow of Crimson's question. Yeah, open interest is, in essence, the total number of contracts outstanding. It's a little different than a stock. Stocks, there's only a certain number of stocks issued. Open interest is the total numbers of longs or shorts. To create a contract, you need a long and a short. This is a zero-sum game in futures, Crimson. Every dollar made, there's a dollar lost. There's no value creation here. It's one of the things that I think makes it so difficult. So here's the NASDAQ. Similar situation here as the S&Ps. It's now created an area of balance, and we are right in the middle of it. The move to the downside off the high from yesterday added 2,600 in open interest. That's the estimated number again. We're looking at a kind of longer time frame structure, lower, much like the S&Ps. In short time frame, our area of balance is the last week's low and last week's high. To be more specific, on the high end, 11,184. On the downside, 10,759 is really the extremes of the current area of balance that I see us in. And again, we're centrally located in that. It's going to complicate things. It's going to create short time frame control, and short time frame control creates short time frame levels that are more likely to be respected. Here's the 30-minute chart. So overnight longs, perhaps. Nothing tremendous, I don't think. That open interest increase yesterday on a down day indicates new shorts, but again, we had a P-shaped profile, which indicates long liquidation as well. So if there's a combination of the two, there were more sellers that got in this market than exiters of longs, if that makes sense. Look at the range from yesterday. We're right in the middle of it. We're above value, but we're in the middle of the range. There's probably some possible repair that could happen up here. Again, in the equities today, knowing what we've got coming out at 9 and 1 Central Time, respectively, we're going to be looking to stay patient. I'm going to be looking to see if we can get an opportunity at the overnight high or at the overnight low, or at the high of the initial balance or of the low of the initial balance, because our longer time frame, well, short time frame, but longer time frame extremes we know are here, the weekly kickoff low and last week's low and last week's high, before we're going to find any bigger breakout or pullback rejection type opportunities at those extremes. Stay patient today in the equities. Gold, good opportunity this morning in gold. We've got an additional almost 8,000 new contracts created yesterday on good volume in a breakout type of situation. We are now in an upside continuation market state. Short time frame, medium time frame structure is higher. We are now out of balance. Okay, what do we do when we're in balance? We fade the extremes until there's a breakout. When there's a breakout, we go with. So this is a continuation market state, because again, it is now out of balance. Okay, that open interest increase, that's encouraging for new longs coming into gold. The volume yesterday also encouraging. What is an auction? What are the features? Volume is the driver of price. Price is merely the advertising mechanism. When volume increases on a breakout and open interest increases on a breakout, we expect that breakout to have some more legs to it. Take a look at the 30-minute chart. All right, overnight inventory to the long side. The opening range is the low of the session. That, I think, is where our good friend Mr. Vince caught a nice move, and it was a relatively small opening range, which makes it really cheap. I'm going to show you something on a different platform. We had long overnight inventory. We had a gap open, no attempt to close the gap. Check this out. Okay, here's gold. This platform represents the first minute of trade by this gold line, this gold bar right here. So 720 open. The 720 open left the opening range at the low of the session. How big is it? 60-20 to... So it's about a 13 tick opening range. So our risk on this is about 15, 17 ticks. Well, it was the range for the day so far is 97 ticks. So, if we got out at the high tick, we could literally have taken 80 ticks on this trade. That's a heck of a nice trade. So, Vince, if that's what you caught, nice work. So, we have an opportunity to buy it on weakness, the opening range, the low of the session, and a continuation to the upside. How good of a job is it doing since then? We're not seeing big momentum up here. So if we get the opportunity to get another chance down here near the opening range, it's worth a try, because it's cheap. And it's already proven to be where buyers entered into the marketplace. Just a thought, if we get the chance. Euro. So yesterday, the euro took a pretty big dive as the dollar had a good pop yesterday. It's given most of that back, but the euro failed to close below weekly kickoff low, which was 1.0600. Settlement was 1.0617. We lost approximately 9,200 in open interest in the euro yesterday. That's not indicative of the beginning of a new auction. It's the possible beginning of the end of an auction. But the fact is that the market did not show signs of acceptance below weekly kickoff low yesterday. Volume was good. Medium time frame structure is still higher, and we're in short time frame balance. The high of the balance, 1.0767, and weekly kickoff low, 1.0600, is the low end of that area of balance. So we've gone from kind of directional to the upside to an area of rest, digestion, balance, whatever you want to call it. Here's the 30-minute chart. overnight inventory to the long side. We've opened with a gap. We've struggled to close the gap. So this, this regular trading hour session low looks interesting for an opportunity. Last week's low seems to be a little bit magnetic for us today. But as long as we can't close this gap relatively early, I look for opportunities to buy weakness. Not too sure about what I think about this, but there's the gap from Friday to Monday. We could repair this area. To the 10-year. So yesterday, decent volume, adding 22,000 in open interest off this low. We got higher range, higher open interest on higher volume. Oh, well, that's kind of healthy for an upside auction. Now we're seeing some continuation today. The longer time frame structure is to the downside. If we were to look back further, here it is. The long time frame is structured to the downside. Here's the daily again. We had an excess low on Friday. That's something that I'm finding to be a little encouraging for longs. Short time frame balance has formed, but it's a very wide area of balance. We got a lot of things that we can move around in short time frame control before we really start to push longer time frame traders. Here's the 30. Overnight inventory long. Gap open. Gap remains. There's so much visual targets above this market. So many naked points of control. So many weak structure points above the market. I think that the focus of traders is going to be on trying to come back and recheck some of these comfy little areas of these naked points of control. And if that's what they're looking at, that's what they're pushing the market to. Of course, anything about the FOMC today can change anything at any point. Here's the TPO charts. So we did have 2 ticks of excess on the low here. Excess on the low here. Look at how this chart looks. Now there's a couple of naked points of control down below that have yet to be checked, but the vast majority is above. There's so many naked points of control above here that the market is likely to go and seek. And if traders are looking at those, whether they realize it or not, they're very familiar, either consciously or subconsciously, about the comfortable levels that these points of control have created in the past, and the market has a tendency to go where traders are looking. No guarantees, but there's a whole lot of repair up above. B shape, but kind of anomalies. Here's an anomaly. Here's a hole. Anomalies, holes. There's not great structure supporting this market, but a lot less structure up above here, kind of drawing price to it. And we're going to take a quick look here at the natural gas. We ended up closing below weekly kickoff low yesterday. We've had a couple of attempts to try and continue this push to the downside. Open interest was higher by 15,000 on this push to the downside yesterday. Starting to feel like maybe we're getting a little bit too short here. Looking at the 30-minute chart. So my notes here early in the morning were watch for continuation outside of yesterday's range. We just traded back to yesterday's range high, which could provide a decent cheap opportunity for us actually in either direction. But I'm looking at the overnight low and our current regular trading hour session high as kind of important levels for us. TPO chart. Normal variation day, push to the downside. Central point of control, which indicates kind of even buyers versus sellers there. So hopefully that's going to help and kind of get you ready for the trading day, and just kind of taking a good look at the current context of the marketplace and getting the prep in. All right. I see you guys have been answering some questions for me. That's a wonderful thing. If you do continue to have questions about anything, group coaching is today. So I'm going to put the link in for the invitation to the Zoom meeting for group coaching, and it'll give me a lot more time to help answer those questions as well. Okay, there's the link right at the bottom there. Good morning, Ted, Maybach, good morning, Dan Trader, Denny, Caesar. Thank you all for continuing to help with that. So yeah, Shadow of Crimson, come to the group coaching session. I've got an emailed in question that I usually will start with those, but any questions you have, and if I know it, I'm going to tell you. If I don't know it, I'm also going to tell you that. Nobody knows everything. I certainly don't. There's so much to know involved in this. It's wonderful for us to get the opportunity to sit back and have an hour to kind of hash things out together. I learn more than you do in those sessions. So get out there and trade well today. Let's take our deep breath. Stay calm, comfortable, humble, creative in your trading today. Looking forward to seeing everybody for group coaching and Make Hogue Money and the reflection at the end of the day today. Be kind to yourself. Take it easy. There's no perfection in trading. We can't expect that, so don't expect it. And look forward to seeing you at the end of the day. Hopefully you have a wonderful trading day. Be kind to yourself. Be kind to others. Say a prayer for peace. We'll see you soon.